AST SpaceMobile is building the first and only space-based cellular broadband network that can be directly accessed by standard mobile phones. This space company is in the process of merging with a SPAC called New Providence Acquisition Corp., ticker NPA. The business combination is expected to be completed in the first quarter of 2021. After the business combination is completed, the ticker symbol is expected to change from NPA to ASTS. In this video, I'm first going to give a high-level overview of AST SpaceMobile. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. Then I'm going to go over my game plan for investing in the common stock and the warrants. All this right after I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, my channel is primarily about investing in the stock market. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. And I'd like to give a big shout out to one of our viewers, James Bond, who told me about this SPAC merger. So without further ado, let's get right into it. What is AST SpaceMobile? In order to understand what this company is, let's take a look at the company's website at ast-science.com. AST and Science is building the first and only space-based cellular broadband network to be accessible by standard smartphones. Called SpaceMobile, this ultra-powerful network will provide connectivity at 4G and 5G speeds everywhere on the planet, on land, at sea, and in flight. For the first time ever, mobile subscribers will be able to automatically roam from land networks to a space network. Whether in the most remote location, on rural farmland, or in the midst of a crisis or natural disaster, people will remain connected no matter what, without having to invest in expensive, specialized hardware. So that's the company in a nutshell. This is pretty amazing if the company can achieve its goals. So now let's take a look at the investor presentation, which I'll leave a link to in the video description. I'm not going to cover every single page of the investor presentation, so I also encourage you to check out the investor presentation yourself. First, let's look at the New Providence Acquisition SPAC management team. What jumps out to me is that the chairman, Alexander Coleman, has general telephony experience with financing emerging mobile companies and as a lead investor in PCS and mobility service companies. That's important to me because I prefer SPACs that have some expertise in the target company's industry. Gary Smith was co-CEO and COO of Red Bull, which is a very successful beverage company. So of course, that's very cool to have him on the team. Now let's take a look at AST SpaceMobile's management team. Abel Avalon is chairman and CEO. He has over 25 years of space industry experience. I did a Google search and found that he has many satellite communications patents dating back to 2009. So he's been in the satellite communications game for a while. He was founder and CEO of this company called EMC, which stands for Emerging Markets Communications. Not to be confused with Dell EMC, which is a completely different company. He sold his company in 2016 for $550 million. From what I'm seeing, he is a very capable CEO who's passionate about satellite communications. So this is a very good thing. Some of the other company leaders have deep technical knowledge in RF engineering and SATCOM, and have connections with Northrop Grumman, NASA, and MIT. So that's also a good thing. Now let's take a look at the market opportunity. According to the presentation, there is a $1 trillion global mobile wireless services market, with 5 billion mobile phones moving in and out of coverage, and 51% of the global population without mobile broadband. So that's the market that AST SpaceMobile is targeting. And of course, their mission is to eliminate coverage gaps and enable billions of people globally to stay connected through their mobile phones. So who are SpaceMobile's competitors, and how does SpaceMobile differentiate themselves? From this slide, we see that these various companies either have solutions today or solutions that are coming. Even SpaceX and Amazon are listed as companies with solutions that are coming. I believe that the SpaceX solution they're referring to here is called Starlink. SpaceMobile claims that it will have the first and only broadband solution that is direct to mobile phones, unlike competing solutions that only provide narrowband service on sat phones or require complex, expensive hardware. If this is true, then it will be a totally seamless experience for users to access SpaceMobile with just their existing mobile phone, which would be pretty awesome. On this other slide, they also imply that they will have no true competition because they will have over 750 patent claims, a first mover advantage, and binding mutually exclusive commercial agreements with large global wireless companies. So they definitely answered the biggest question on my mind, which was whether or not SpaceX was a viable competitor. According to the presentation, SpaceX's Starlink is not a threat. How and when will SpaceMobile deploy their solution? So first, let's talk about the when. Like many other early stage SPAC companies, SpaceMobile currently does not have a working commercial product. Their plan is to launch Phase 1 commercial service in 2023. The goal of Phase 1 is to provide coverage for 1.6 billion people across 49 equatorial countries. And after Phase 1, they plan to expand to the rest of the world. And this slide shows the company's execution plan over the next few years. They plan to launch and test their Blue Walker 3 satellite in 2021. They plan to launch 20 Phase 1 satellites in 2022. And the first commercial launch is planned for 2023. Now let's take a look at the transaction overview page. Post-transaction, there's expected to be about 181.6 million shares outstanding. A $10 share price implies a market cap of $1.8 billion. The enterprise value at $10 per share would be approximately $1.4 billion. There will be a 12-month lockup period for existing AST SpaceMobile shareholders, and the AST SpaceMobile employee stock options will be subject to a 2-year lockup. SpaceMobile is expected to receive $423 million in proceeds, net of transaction expenses. Cash proceeds will be used to fully fund Phase 1 commercial launch, and there will be no debt on the balance sheet at close. SpaceMobile founder will own 43% and have 10-to-1 high vote shares. Other existing SpaceMobile shareholders will own 28%. The PIPE investors will own 13%. The SPAC founders will own 3%. The other SPAC investors will own 13%. Some of their key PIPE investors include Vodafone, Rakuten, and American Tower. So these are some pretty heavy hitters. Now let's look at their financial projections. Like I said earlier, the company doesn't expect any revenues until 2023. Once Phase 1 is launched in 2023, management believes that they can achieve $180 million in year 1, and scale that up to $16.4 billion in revenues by 2030. Of course, I always look at this with a highly skeptical eye. It's my understanding that these are just very high-level guesstimates from management. So of course, it's up to the investor to decide how much of this to believe. Okay, so that was a high-level overview of AST SpaceMobile. So what is my bull case for the stock? In order to understand my bull case, let's look at the 2026 projected revenues, since that is 5 years out. To try and be conservative, I'm gonna cut their 2026 projected revenues in half. So instead of $5.8 billion, I'm projecting $2.9 billion in revenues in 2026. If their patents hold up and they truly deliver on their promise of 4G and 5G speeds to existing mobile phones, that would virtually give them a huge economic moat. And assuming the Fed hasn't raised rates dramatically, I believe that Wall Street will assign a 15x price to sales multiple on the stock, giving them a market cap of $43.5 billion. If we divide $43.5 billion by 181.55 million shares outstanding, we get a share price of approximately $240. The current share price is around $15, so that would give a potentially 16-bagger return. All right, so before you do something crazy like take out a loan to buy this stock, be sure to listen to my bear case and my game plan. So in my bear case, it's pretty simple. The company burns through cash in the next 5 years and never completes its mission. The company goes bankrupt and the share price goes to zero. So in my opinion, this is a very high risk, high reward stock. So what is my game plan? At this time, I'm estimating that the company has approximately a 20% chance of success. I highly doubt that they'll complete phase 1 by 2023, and I'm guessing that it will be delayed for at least 1 year. They're trying to do something that's never been done before, and I think that the projections are extremely optimistic. I even found an article on this site called The Observer that states that NASA is gravely worried about the risk of these satellites colliding with other objects in Earth's orbit, and voiced its objection to the project in an unprecedented open letter. Because of the high risk in this investment, the maximum I'm willing to invest at this time is up to 1% of my portfolio. I ended up starting a small position in the stock at $12.01 and a small position in the warrant at $4.39. This is a speculative long-term investment for me, and at this time, I'm willing to lose my entire investment since it's such a small amount of my portfolio. If for some reason the warrants tank and fall below $3, I may consider buying more warrants. In the short run, I do believe that there is still a lot of hype and FOMO in the market these days, and I think that there's a reasonable chance that this stock could go to $20 or $30 in the next few months. If for some reason I get a double or triple out of my investment in the coming months, my plan is to sell off my warrants and let the common stock ride on the house's money. Like most SPACs, the warrants of course have an early redemption clause if the common stock trades above $18. And I'm expecting the warrants to expire within a few months after the deal is completed. There's also language in the prospectus that can potentially allow the SPAC to redeem the warrants early if the common stock is lower than $18. The company is supposed to issue a 30-day written notice, and what I've seen other companies do in the past is post the notice on their website. But bottom line, if you decide to hold the warrants after the merger, it's really up to you to be aware of any early redemption and be sure to do your own due diligence. All right, so let me know what you think about AST SpaceMobile and what other SPACs you are watching. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.